Baker Avenue Wealth Chief Strategist King Lip joins us now to talk about all that. King, good to see you again. Just tell me where you think the general field position is. I guess no surprise, NASDAQ 100 up more than 40% year to date. We've built in a lot of heady expectations about long-term trends, but where do you see the market trading in the near term?
Hi, Mike. Yeah, it's been a wonderful tech rally, but we do see two reasons why it's changing. Number one, the tech rally appears to be broadening. So if you look at positions like ARK, has more sort of mid-cap, smallish cap tech exposure. That outperformed the Qs by about 10% during the month of July. The equal weight Qs are also outperforming the market cap weighted Qs. So it does appear that that tech rally is broadening, which we think is healthy. However, we are getting into more seasonal headwinds. If you look at the last 10 years, 100% of Julys have been positive for the QQQ, average gain of about 5%. But if you look at the following months, August tends to be a little bit more tepid. September actually tends to be negative, and with an average return of negative 2.5% return. So even if you took that back 20 years, you see the same sort of historical pattern. That being said, we still think tech earnings are going to be good for the remainder of the year, and we remain bullish.
When it comes to earnings, it's so tough to figure out whether the market has been really paying close attention to the trend in profits on names like Apple, or if it's just something else, just the general attributes of mega cap tech. We don't own enough. It's 7% of the S&P 500. It's a great company, balance sheet, all the rest of it. I was noticing fiscal 24 estimates for Apple haven't moved in like 6 months, and yet the stock is up, by a third. So how does that leave Apple going into its own report?
Yeah, it's a good question. Shares of Apple look a little rich here. As you said, the earnings estimates for this year are actually going to be down about 2% for the year as a whole. I think the flip side of that is that we may be seeing the final bottom in terms of the earnings decline for this quarter. Having said that, we think it's going to be what we call a ho-hum quarter for Apple, flat earnings growth for this quarter. But I do think there could be some good news in light of that. The services business continues to grow. It's a high margin business. There could be a potential for an upside on Apple's PC business. Intel's news was good and showed that PC demand continues to be healthy. We're going to be looking for, iPhone signals as well, from the Indian markets and the Chinese markets, because that's really what's driving a lot of the growth in iPhone these days.
And when it comes to Amazon, very different setup, really. I mean, the stock is still a 40% gain from its old high, so it really had underperformed for a long stretch of time. Seems like a little bit of Wall Street impatience about, management either having a sense of urgency or being on top of the AI story in AWS. What's your quick take on Amazon going into the report?
We're expecting a good quarter, actually, from Amazon. 92% earnings growth this quarter. Valuation actually looks quite cheap, relative to other large cap tech. So up to two, we think there's probably going to be upside on the earnings report coming this week.